Good evening, everyone, and welcome to EV Acad's Net Zero series. Thank you for joining us today in the discussion on decarbonization choices for business leaders. As organizations move from net zero commitment to execution, leaders are required to make practical, well sequenced decisions across technology, cost, and long term credibility. Before we start, please take a note that you can share all your questions anytime in the Q&A session and stay active in the chat where we will be running a quick poll during the session to make this discussion more interactive. Today, the session will be moderated by Professor Weber Moria, who is an area chairperson economics at IIM Kashipur. He will be guiding the conversation and bringing together perspective across electrification, hydrogen, and carbon market. Over to you, sir.
Hi, everybody. Good evening. And it's a nice, evening. And it's great to welcome you all to this, webinar today. We have, three very, very esteemed guests with us today. We have Vikrant Vaidya, who heads the business portfolio of P-Manifold, an expert on the electric EV, side, bringing all the insights from the EV markets, having worked with across 60 countries and more than 60 countries globally. So it's a very, very global perspective that you're going to get. Is thing we have Santosh Gurunath, who's an expert on the hydrogen market and cutting edge technology market. So which is which are seem to be coming together. And we are all very excited to know about green hydrogen. Very few of us probably know a lot about it. So, we're looking forward to a lot of inputs from him. And we have Dr. Kapil with us, who is an expert on carbon markets, and he's going to take us, through this ride on carbon markets. And, we really look forward to Dr. Kapil to hearing from you. And guys, where this webinar is located today, it's a very great thing because we are living at times when decarbonization is a thrust area, not just at the firm level, at the individual level, down to the micro level, to the individual level, to the macro level, to governments coming together and discussing it. So it's an agenda that cuts across levels, across nationalities, and across all type of boundaries that you would have thought about. Not just that, decarbonization is also something that brings together physics, chemistry, biology, business management, finance, mathematics, everything possible today. And that's where decarbonization is very, very important nationally, because we have national targets that have been set, and these national targets are fueling policy and the business environment for firms. And that's where firm strategy and decision comes in. Now, decision makers at different levels, especially business, even when it's policy makers who are making policy for business, or business, people making decisions for advancing their business or sustaining their business, there are choices to be made. The fact that decarbonization is an option is not, anymore a fact. The fact is that decarbonization is a mandatory thing now. It is not anymore an option. It is something that everybody has to do. Every business has to ride this bandwagon. But that's where the decision problem for the decision makers starts. How do I go about doing it? What really do I mean by decarbonization? What are the options? So we have three, luminaries over here, bringing to you the three most talked about options in decarbonization today: the EV technology, the green hydrogen promise, and the experience of carbon markets over here. While each one of these probably is in a different stage of development today. So maybe we hear a little more about EVs. Those who are tuned to the domain know that carbon markets have been functional globally for a longer time, and we are on the cusp of having a carbon credit market in India of our own. We are moving towards that. And green hydrogen is a promise that, probably became very popular in India once we saw our minister ride to the parliament in a hydrogen vehicle. But that's not just all. India has already tested a train on green hydrogen, and that promise is there. So, it's not really that, the decision making is really about technologies which are at different stages. Yes, they are at different stages. The technology maturity may be different, but the promise is probably very, very solid for each of this. And, that is there. And, so for a decision maker, the problem is about how to choose between them. Knowing the options and knowing a little bit about each option, how do I really choose? And in that respect, I believe any decision maker, any person who's in the implementation game, we have to figure out and know a little more about what these options really are, and how do we really approach towards analyzing these options so that we can take an informed decision that is there. Now let's approach this problem from the side of a decision maker. So what I really, sort of realized from a decision maker's perspective is I will have to think about multiple dimensions when I'm taking a decision. So my decision may be a cost decision. Somebody looks at it from a cost angle. Okay, how do I really go about doing decarbonization at the lowest cost? Yet somebody else may think, okay, can I increase my revenues based on decarbonization? Can I build a business around it? And then somebody says, okay, I want to build a business, but I don't know what strategy to adopt to, sort of build that business and go about it in the markets. And there's somebody who says, okay, can decarbonization increase, enhance, or give me profits? Which is a very, very fourth dimension. And then there is somebody who's probably more conservative and says, okay, well, I don't know, really understand, and I'm not really, so much bullish about this thing, but can we just do the regulation compliance bit? And because I have to do it every year, can we do it in an efficient and effective manner so that it doesn't hamper business, but probably gives me growth opportunities? And someone else might say, okay, does it really give me more market share? Does it really help me compete against competition? Right? And yet somebody says, okay, now you're talking about decarbonization, but sort of if I look at it as an investment, are there return streams that I'm going to get? So sort of what I'm trying to say over here is that the decision maker is actually beset with different dimensions, and the lack of proper knowledge of each of these options sort of makes this complexity sort of further aggravated. And this is where sort of we want to discover about these three options and how do they really stack up with each other. And we want to get into this very healthy discussion. And so sort of I'm going to take a back seat. I'm going to ask sort of each of my sort of participants to talk about it. But just to give you a reminder of what you guys have already seen on the internet, we are talking about sort of whether electrification and EVs sort of which are already delivering value, and how do they really do it, and can business people really misjudge their readiness, because it appears to be a technology that seems to be straightforward. Whereas, sort of how realistically do businesses look at green hydrogen, and can they really build long-term strategic goals around it? And at the same time, what is the right role of carbon markets that business people can, sort of see about it, and sort of can we really balance business interests and the impact that we are actually seeking on the environment with this there? And sort of how do we really sort of sequence decarbonization, because the strategy is not enough, you have to get into action. So how do we really sequence our actions? That's what sort of you guys will get in the background. And with that, I think so sort of I'll open the discussion, and let's start with more familiar territory. So, Vikrant, I'm going to invite you to talk about the EVs and give us a perspective on EVs. Really, sort of how much do we really know? Where can people misjudge? And how can we build a strategy around it? Over to you, Vikrant. So,
Sure. Thanks, Prof. Hopefully, I'm audible. Great. So, thank you for giving that preface or introduction to the topic, because as you rightly said, there are three aspects that will be in discussion today, and at different levels of maturity, and I would say at different levels of awareness as well, right? So, EVs have been around; they are around. People can see them. Hydrogen, even if it is around, you can't see it, it's gas. But I mean, even as infrastructure, we are not seeing that yet. People working in the industry would probably get to see more of that rather than the common person, right? And then the third aspect is carbon markets, where I think there is lots of work going on, and even I would say I would be looking forward to Kapil sharing what exactly we can expect from there. But coming to EVs, the technology has been around for a long time. In fact, it has been concurrent with ICE, but because it was convenient for us to use fossil fuels, we continued down that road, knowing that it's not sustainable. It's a limited, finite resource. plus it is an emitting resource. So how EVs come in? So EV is essentially part of electrification, broader electrification. Why electrification? Because it lets you diversify your fuel, right? You can generate electricity through diesel or petrol. You can generate electricity through solar, coal, wind, and so on. And now you would have noticed that some of them are non-renewable, some of them are renewable, some of them are emitting, some of them are non-emitting, right? And in that perspective, when we say electricity, it doesn't matter from what source the electricity comes. It is useful, and in fact our grid is a mix of multiple sources of electricity. Around 70% is coal, the rest of it are different sources: nuclear, solar, wind, hydro, and so on, right? So electrification is in a sense making us compatible with a variety of energy sources, moving away from our dependence on just one source, which is petroleum products. I would say it is one source because diesel, petrol come from the same crude oil, right? There are biofuels, yes, and lower carbon fuels, but eventually when we talk about zero emission, it has to be a non-carbon fuel, right? And in a sense, even the fuel cell vehicles, the hydrogen vehicles, which Prof talked about, they are also electric vehicles. Why? Because they are essentially using a motor to drive the wheels of the vehicles, right? Why does it matter to business? Because uh, either directly or indirectly, we do use transportation, right? And transportation accounts in India at least around 13 to 15% of CO2 emission, the transportation sector alone. Majority of the CO2 is coming from power generation, but then second or third, I would say, is the transport sector. And not only that, there the technology exists for you to move away from emitting sources. So you can reduce and even eliminate potentially the CO2 from your transportation activities, right? Uh, uh, there are, of course, many things in scope 3. I think we'll discuss more about it as we go forward, but which are indirect influence or indirect control of the corporate, right? But there are a few which are scope 1, particularly in industries where you have to engage transport directly for your business, right? So they're moving to the electric vehicle. Now, electric meaning not just battery electric, but any kind of electric vehicle gives you that opportunity to eventually go completely zero on carbon moving forward. So I think, take a pause here in terms of how electrification can play a role, and I think we'll move on to the next turn to elaborate further. Back to you.
Yeah. Great, guys. So I think so we have a starting perspective on this thing. Would Dr. Kapil or Santosh want to to add something on the EV front, very quickly, or do we move to the second topic? Yeah.
I mean, what Mr. Vikrant has shared is absolutely right. I mean, EV has picked up space. It is an accepted solution for decarbonization, and it has been proven across technology, across implementation, across economics. So, I mean, honestly, EV is a no-brainer, right? I mean, we should, as long as there is access to renewable energy, so EV as a driver towards decarbonizing transportation is something which should be done, right? And should be adopted and should be scaled as fast as possible. And there are definitely challenges which Mr. Vikrant will talk about later around rare earth materials, around supply chains, etc. But I think those are all solvable issues, right? So I think I mean completely agree on the front of light mobility as well as medium mobility, and even to a certain extent heavy mobility. EV is the best solution which is out there. Completely second Vikrant's view on that.
Is in Norway, more than 95% of the total car sales are EVs. In China last year, more than 50% of new car additions were EVs. I'll just stop there.
Yeah, and I'll just add, sort of, so most of us feel that, sort of is difficult, but trust me, somebody who's living closer to the Himalayas, now EVs you can see all the way to Pithoragarh, Munchiari. In fact, this winter tourism picked up. There was a petrol outage in Pithoragarh, and EVs were the only vehicles that were running around, sort of very well. So, sort of, we are also seeing, sort of very interesting things come up. But yes. So, sort of EVs are already arrived and probably they're easy to operate and something, which touches the level of individual users also very good. Hydrogen, I believe, is a very different business. It's a technology that looks more, sort of difficult for the average person and the average decision maker on business to understand. Looks more technical than EVs. But sort of probably there it's more sectorally focused, and especially what I read about hydrogen is that probably it's much more the silver bullet for higher to difficult to abate sectors. So sectors where we really don't have many options, that's probably where the greatest promise of hydrogen lies. So Santosh, would you enlighten us a little more about the hydrogen promise and sort of what really are we really seeing and sort of how bullish can people really be towards future strategies on hydrogen?
Definitely, Dr. Professor Vaibhav, I think, I mean, hydrogen has turned out to be, I would say, the most talked about decarbonization agenda, at least over the last 2 to 3 years, right? I mean, will it really live up to the promise? Will it actually lead to that decarbonization? Are all the questions which we are currently waiting to answer. Now, I mean, at a very broad level, if you look at, hydrogen has been used for a very long time in the industry, right? Specifically for your refineries and for ammonia generation, methanol generation, hydrogen has been used for a very long time. Now, the way in which hydrogen is produced is carbon intensive, right? You use natural gas or coal, and these are carbon intensive. So these sectors, if you want to decarbonize these sectors, you need to move away from a carbon intensive form of hydrogen generation to a low carbon form of hydrogen generation, right? So that's where green hydrogen comes in. So those sectors where hydrogen is already part of the economy in a major way, right? I mean, globally, there's around 95 million tons of hydrogen which is produced and used on an annual basis. And in India, there's around 6 to 7 million tons of hydrogen which is used. So these are significant numbers, right? It's a very large multi-billion-dollar economy if you look at hydrogen alone. So those sectors are obvious, right? I mean, if you want to decarbonize it, you replace that using a lower carbon emission source. That is one. Second, there are a number of other sectors which you rightly said, Professor Vaibhav, in terms of hard to abate, right? You're looking at steel, you're looking at maritime, you're looking at aviation, you're looking at certain industrial sectors such as cement, etc. So all those sectors are fairly difficult to decarbonize. In fact, let me put it this way, they are almost impossible to electrify, right? And because production of hydrogen almost or low carbon source of hydrogen almost certainly takes place through an electrolysis route, an electricity route. There will be losses in the process of producing that hydrogen, right? So, in case there is an application where direct electrification is possible, just like EVs for light mobility, then that should be the solution. Hydrogen should not be the solution for those applications. However, those applications where electrification is either not possible at all or it is very expensive because you're talking about very high temperatures or you have chemical which comes into play. In that case, it's not even possible. Those are the applications where hydrogen makes sense. So overall, we need to be prudent about where hydrogen makes sense and where it doesn't. And prudency is also important because it's very expensive and energy intensive to not only make hydrogen, but then also to store and transport and use it, right? So use it where there is no other solution, as you rightly said. And we'll cover more about that perhaps in the next subsequent questions. And the last aspect is it is a very much emerging sector, right? So just like EVs, maybe around 7 to 8 years back, and hydrogen and solar around 10 to 12 years back, where there are a lot of questions asked whether it's actually feasible, whether the costs are, cost parity can ever come in, or whether, let's say, the infrastructure would ever pick up, right? So those are the kind of similar questions which are asked in the hydrogen ecosystem, and that's where the industry, together with the government and policymakers, are supporting towards answering them. So in that sense, early days, but definitely hopeful. And in fact, we cannot do away with it, basically. Back to you, Professor.
Yeah. So, Santosh, just, following upon that, so, sort of are, because we are still largely saying that it's a promise for the future and especially for difficult to abate sectors. So, are there, sort of definite policy pushes, policy signals, or, sort of market signals that will help this thing, and, something that probably, businesses need to understand from the policy perspective with respect to hydrogen?
So couple of things, right? I mean, one, to kind of nuance a little bit, it is a promise of the future more from a perspective of overall economic feasibility, right? I mean, EVs really picked up when's the point where the cost parity started to achieve. Same applies to solar, right? Solar picked up only in the last 4 5 years when there's a cost parity with coal, right? So until that point of time, it is definitely a mandate level push or a mandate or a subsidy level push. So where globally, I mean, Indian government is around 20,000 crores subsidies as part of the National Green Hydrogen Mission, and there's another 20 30,000 crores which are also coming from the state governments, which does not get highlighted a lot. So total around easily about $5 to $6 billion, which is pumped into the sector from the Indian, let's say, government and the state governments. And similarly, globally, European Union, Australia, Japan, UK, a lot of them are giving that initial impetus for the industry to get started, right? And then and to get started, by that I mean you need to have first of its kind projects, build the technology, build the confidence in financiers and bankers in terms of technology readiness levels, right? That it actually works. Unless, I mean, because they are the ones who need to underwrite the risk, right? I mean, ultimately 80% or 70% of the project financing comes from their side. So that is second thing. Third, the technology needs to also, reach a certain level of maturity, both from a manufacturing standpoint and a supply chain standpoint. And finally, I mean, there are standards which also needs to come in. I mean, even EV, right? I mean, let's say up to even 4 5 years back, there were very limited standards, and people didn't even know what kind of plugs to use and what kind of connectors to use. That all has matured over time. To facilitate all that, government is pushing a lot. There's a lot of policy level imperatives and drivers, and that is what will continue to be for the next few years. And once we pass that period, right, past that point where the confidence builds up across board, that's where the real scale up will happen, similar to what you are seeing in some of the other decarbonization technologies.
Okay. Yeah, very interesting, sort of realizing this thing, but, sort of that makes me turn back towards Vikrant, sort of because what I see, sort of Santosh telling us is that, sort of there are many signals that any business leader has to look at before, you can really say that, okay, green hydrogen is what I'm going to invest in. But Vikrant, it would look like, compared to green hydrogen, that EVs is a choice, right? Sort of it's a straightforward layout thing, but are there mistakes that people can make with EVs and what people need to understand? Because sort of we are still sort of waiting to see a lot of people give out use cases that, okay, this is how I really benefited from EVs. So from that perspective, can you tell us what mistakes can people do and some pitfalls and what to and how probably people can go avoiding them? Sure.
Sure, Prof. Yeah, it's a very important question because lot of times, even to certain extent, we are guilty of it, is overselling something, right? EV is a promising technology. EV is delivering by and large what we expect it to deliver, but it has its limitations, right? For instance, we have long distance commute, be it bus, be it truck, be it even personal vehicles. Now if you are looking at that kind of mileage in a day, and if you look at what kind of batteries you put on it, it starts becoming unviable, be it carrying load, be it the cost of the vehicle, because we know in EVs the battery cost is kind of making up nearly half of the cost of the vehicle, or you could even say that's the difference between the cost of a IC engine vehicle and a electric vehicle. And there is a limit to which you can keep adding battery energy capacity. So there, I think we look at, so there's a study we did around a couple of years back where we identified for commercial sector what would be what use cases would make sense for EV. from feasibility perspective, economic viability, yes, but feasibility perspective as well. And there, with kind of what seem to be the practical battery sizes, around 20% applications, use cases can work with what the battery capacity gives them as a range through the day. Yeah. Then you have around 60% roughly, where you can make that technology work by having a lot of charging infrastructure developed, so that the technology can actually work for use cases where you cannot just keep adding battery capacity to the vehicle. And there are going to be around 20-25% use cases which the EVs by themselves, EVs meaning only battery electric vehicles, will not work. So there we will look at possibility of using hydrogen. Now, one good thing about hydrogen is it's very good as a fuel if you burn it. It is very good as a fuel if you produce directly electricity from it. There are very few fuels which are flexible and do not have carbon emissions. So that's where I think hydrogen will play a big role. Not too long back, even I think the technical director of Niti Aayog said that hydrogen is going to be enabling even the decarbonization of the tough to electrify, or I would say not tough to electrify, but otherwise tough to decarbonize applications in transport sector. So yeah, I think hydrogen has a big role to play even in transport sector, and of course beyond. We are looking at to complement even energy storage because our renewable sources are intermittent. They do not give us continuous supply of electricity like coal. So all those aspects considered, I think hydrogen is, and green hydrogen is where I think the thrust would be, because the rest of the hydrogen, although hydrogen doesn't emit, the processes emit CO2. So it's not really getting us away from decarbonization. So that's where I think the green part of the green hydrogen also plays a very important role.
So the hydrogen, green hydrogen bit is very, very important. Not all hydrogen is green. That needs to be understood. But sort of that's really sort of where we take to, right? And Dr. Kapil, this is where sort of I would move to you, and we want to really understand about carbon markets. So as somebody was asking in the chat questions, that there are different type of markets. So what really is a carbon market, and how does it really associate with business? And when does a carbon when does a foray into carbon markets make sense for a business? And sort of as one of my sort of entrepreneur friends asked me that, okay, how ahead of my entry into carbon markets do I really need to prepare, sort of, and keep stocking up carbon credits? So how much in advance do I really start? Some of those type of inputs would be really greatly appreciated from your side. Sure. Over to you, Kapil. Kapil, you're on mute.
Yeah, can you hear me now? Yeah. Thank you. I think the animal of carbon market is growing in size, day by day, and it's becoming. You need to identify with it, and that's why I thought let me give a sense of what exactly are carbon markets. I'll start with saying that we should treat it as a carbon pricing mechanism. And a carbon pricing mechanism would have several aspects. One of it is a carbon tax. One of another model is what we call as the emission trading scheme, which is what you would primarily understand by a compliance carbon market. There could be a mix of these two, which is a hybrid option. And then you have a separate voluntary carbon market, which is different from compliance, but or is on the same lines that you can come on and trade and buy and sell carbon credits. So to first, let me give you an overall global view of carbon markets. And there are about 80 carbon pricing instruments globally, of which about 43 are carbon taxes, and 37 jurisdictions, be it national or subnationals, they have emission trading schemes. And overall, if you see globally, about 28% of the global GHG emissions actually come under carbon markets. They have a direct kind of a carbon price. So that's a substantially significant part. And of course, the carbon pricing or the carbon tax, for example, varies from 5 cents to for every ton to about $160 equivalent, $150 equivalent per ton. So there's a wide variation, but the average price, if you take it out globally, is about $19 per ton of CO2 equivalent for carbon. But even this price is not consistent with a 2-degree world. It is estimated that this carbon pricing should be in between $50 to $100. Numbers also have said $120, $150 per ton of carbon of CO2 equivalent. And that is what is compatible with the 1.52 degree centigrade target. So that's the global overview. But let me tell you how much revenue does carbon pricing generate globally. So globally, the revenues, which come from carbon pricing is about $100 billion. Of this, about 30% comes from carbon taxes and about 70% comes from emission trading schemes. So that's the size of your global ETS. And a very, very small percent, only about 0.5%, 0.5% is from voluntary carbon markets. So this should give you a sense of, what is the size and globally what is the picture. Now I'll turn some attention to India-specific carbon compliance market because that's probably of interest to the audience. And you know that the carbon credit trading scheme will commence shortly, close to mid of this year. And the volume of those emissions which will be covered is about 700 million tons. Total GHG emissions of India are about 4 gigatons. So it's a very, very small part, less than about 10% of what the total emissions of India. Now, if you compare this with the Chinese ETS, that is about 8 billion tons. That's about 10 times the Indian carbon market size. And whereas, for India, you will have about 700 plus firms or entities which will be covered under 9 sectors or 9 industries. In China, this number is about 3,500 companies. So you can get a sense of, what is the scale of carbon markets in both these countries and in comparison in the globe. The next important thing to note that traditionally carbon market is in the EU, for example, the most famous EU ETS. That's a global cap and trade. That is, you fix a global cap, and then within that you have to stay within that cap, and then you trade. But for India, China, and several other developing countries, it's an emission intensity based target. That means that there is no hard cap on total emissions. But you actually the benchmark is set on emission intensity, and that's how companies which are better than that benchmark earn credits, and they can sell it to companies which are worse off on their emission intensity targets. And that's actually good for a growing economy because you don't want to cap your total emissions. And that's a good design process or a philosophy. And you know that there are 9 industries, aluminum, cement, chlor-alkali, paper, petroleum refining, petrochemicals, and textiles. And for these emission intensity targets have been announced. The latest were announced on 16th January of this year. But for iron and steel, fertilizers, etc., they are under development. So I think with this, I have clearly mentioned, but another point which you need to know that it covers only the industry sector. It does not cover the power sector for now, which is only about 10% of the India's GHG emissions. It covers in terms of GHG gases, CO2, as well as PFCs, which are perfluorocarbons, which are essentially for refrigeration and have a very high GHG emission potential. Tying this up with the domestic voluntary carbon mechanism. So that's what till now what I've talked in the Indian context is the compliance market. Now, along with that, a parallel framework to generate credits is also emerging in India, and they are allowing domestic voluntary crediting market. And essentially, this is covering sectors which are beyond the industry sector, which are not under the compliance market. So agriculture, afforestation, clean cooking, hydrogen, and industrial energy efficiency, and so on. So these two markets are going to be separate. Now, given that scale, I just wanted to touch from the corporate point of view how this ties up into and on what corporates targets are and how can they utilize carbon markets. So the India's net zero goal is for 2070, and but companies and corporates, are quite ambitious. So I'll say that Reliance Industries, for example, have a net zero target by 2035. Oil and gas, ONGC, GAIL, BPCL, these have targets about years of 2040. IOCL about 2045. NTPC, which is the major power producer, of course, because it generates power through coal, it has a target of 2070. So they are widely spread out, but there are very, very ambitious targets. For example, for TCS, IT consultancy, a target of 2030, just 4 years down the line. Tech Mahindra, Wipro, all of these 2040 targets. On manufacturing side, also several companies, Mahindra and Mahindra, Dalmia, etc., have 2040 targets. So now, how do these companies meet their targets in the context of the India's global targets? And overall, and this is my last statement here for this question. Overall, there are about 127 countries who have 127 companies in India who have publicly committed to net zero targets. And only about 7% of these are hard to abate companies working in the hard to abate sector. So most of these are service companies for which it is easier. But the question is, how do they because they don't produce energy, so how do they convert themselves to net zero goals or commit or meet their net zero commitments? And that's where carbon markets would come in. I'll stop here, Professor Weber, for the next before going into the next round.
Yeah. So this is an excellent, sort of deep dive into carbon markets and a lot of stuff. And what I'm seeing is that probably sort of let's sort of a lot of stuff on the table, a lot of information that needs to be processed. And I'll ask a business question, sort of to each one of you, and let's take it one by one in the order that we started. First Vikrant, then Santosh, and then back to Dr. Kapil. I just want to know, sort of if you would really look at if I sort of you had one change in the markets around you that probably would really help, say, your technology, that the ones that you were talking about. So EV for Vikrant, green hydrogen for Santosh, and carbon markets for you. So what would be that one sort of change that you think will give it a great push? And sort of one thing that probably business leaders need to be on the lookout to sort of start looking at this technology really, really seriously as a decision. Over to you, Vikrant, and then Santosh, and then Dr. Kapil. Yeah.
Sure. So I would say for people to get interested now, businesses to get interested, right? Personal mobility will keep aside for now, but business to get interested and looking at EV or electric vehicles as a part of their goal towards net zero is essentially looking at what portion of their current problems or what part of their current emission portfolio does it address immediately, number one. The electric vehicles are already positive in a lifetime, lifetime of the vehicle kind of scenario in terms of their total cost of ownership. So by and large, we see they are already positive when we look at commercial applications or as a business if you are looking at EVs, because you are going to use that asset as much as possible. Of course, there is a upfront cost, higher upfront cost. So one of the enablers that we look at is ease of financing. Right now, even if you say that there is no higher rate of interest charge, even if the rate of lending is same, because the price of the vehicles is higher and it is expected to stay higher, it will come down, but it is never going to be at the level of IC engine vehicles. So access to affordable finance for particularly the corporates to influence their service providers, the scope 3 part, that is going to be very important. And even the corporates could play a role there because it's in their interest as well to enable that transition. And number three, I would say the businesses would have to, although there is a potential of reduction of cost for them, the logistics cost for them, they need to be a little patient with that, because till they're the people who actually buy and run those vehicles are not comfortable and they are not assured, they don't have that confidence that yes, it's a positive business case for them. It will be hard for them to pass on that cost advantage to the corporates at the very outset, right? They will have to be a bit patient, maybe stick with what their rates are for the time being, and maybe 2 3 years down the line they can look at potential reduction. So I would say on the ground, those are the three things which would help immensely the electrification.
Yeah, Santosh.
I mean, when it comes to hydrogen, right, the answer is a bit more, I'd say, complicated. Let's break it into two parts, right? I mean, one is there are low-hanging fruits, right? I mean, where hydrogen makes sense today, it is economical, right? And it's all about, going ahead and deploying it, right? I mean, so of course, I mean, the capex might be higher, but the total cost of ownership would be cheaper. But there is clearly a business case, right? I mean, it's not like you're losing money. So those are the applications where I would believe that we should kind of as a industry, as a society, do everything possible to push those applications through. Okay? So those are the low hanging fruits for sure. Now, when it comes to the larger scale adoption, I mean, ultimately, the way the structure or the commercial structure is currently in place deters deters the deployment or uptake of green hydrogen. What I mean by that is, let's say that you are converting green hydrogen, you're converting, let's say, the hydrogen source in a refinery from gray to green hydrogen, right? The final impact on the price of petrol or diesel at the pump is less than 10 paisa, right? Similarly, if you are converting, let's say, hydrogen, I mean, moving away from coal to green hydrogen in a steel plant, right? Using a green steel process, right? The cost of a vehicle, I mean, let's say, for example, a 20 lakh rupee or a 10 lakh rupee vehicle increases by maybe 10,000 rupees or 20,000 rupees, right? Similarly, if you are using that hydrogen, green ammonia or green methanol you're using for shipping, right? The final cost of the landed Nike shoes, which you are importing from Europe, increases by maybe 10 rupees or 20 rupees, right? So effectively, if you look at it from an end-to-end value chain, it makes sense today, right? Why don't we do it? But then the structure is in such a way that there are so many let's say commercial structures in between, and everybody is of course squeezed in their margin structures, right? So it's not like a green steel can directly be competed with an automobile, right? So there's an entire structure in between, and that is the most difficult part to change. I mean, even if I as a consumer say, you know what, I only want green, it's only going to cost me so much extra. But then across the supply chain, the structures are squeezed out in such a way that it's not possible. I mean, it's not realistically possible that a refinery or let's say an ammonia plant all of a sudden changes its procurement, right? In their books, in their balance of accounts, they are going to be paying 30% higher or 40% higher. And that is not something which their management or their shareholders would agree to. And that's why you need mandates, that's why you need projects. So, I mean, and it's a very, difficult problem to solve, right? I mean, how do you change the commercial structures what are actually in place, even though the end to end makes sense? So yeah, I mean, that would be my, let's say, silver bullet, right? I mean, North Star, if we are able to look at it from that angle, right? And then say, fine, it makes sense, and hence ensuring that everything kind of, distributes equally and the markets are willing to uptake. But yeah, I mean, easier said than done.
Wow. Yeah. Over to you, Dr. Kapil.
Thanks, Professor Weber. It's a difficult question for me. Reason being because carbon markets will grow if companies are not doing their mandated actions. Because companies don't obtain energy efficiency or do fuel switching or such activities, they have to go outside to buy and procure carbon. But having said that, I think let's look at it from a very larger perspective of if you have to have large scale adoption, and what's the main goal of the company? The main goal of the company would be to have net zero emissions. Now, you can be a carbon market is just a tool to achieve that. Now, you can be either on the side of using carbon markets to make revenue for you, or being revenue positive using carbon markets, or you can be on the buyer side, to which makes it as an expense for you. The compliance has to happen because there is a global commitment on carbon and capping it and reducing it. So either by force or by choice, you have to make those hard decisions. So it's a company's choice. Use it for your financial profit, or to increase your bottom line, or consider that as on the expense column. So the choice is for business leaders themselves.
Uh, yeah, sort of very, very interesting perspectives, and, sort of this thing. And, sort of we have a wish list of things that we want that probably should happen. But, sort of, just to wrap up and, move to the last part of this webinar before we open for the questions, sort of just, sort of very quickly, how confident are you really that, sort of businesses today really understand, like, say, EV, green hydrogen, or thing? How seriously are they dabbling into these decisions from, sort of your discussions that you have with the industry right now? Yeah, sure. Over to all three of you.
Sure, we go in the same order. Uh, yes, EV being one of the technologies where the awareness is high, we still see corporates or businesses going into it without adequate planning. I won't say there is no planning, of course, there is planning, but without adequate planning and without adequate milestones identified, enablers, just like the government has to make a roadmap for the policies, when to put in what intervention for how long and how to withdraw it without affecting the momentum that it has gained. Similarly, the corporates need to do that, particularly for electrification, because oftentimes, as even some of the questions dwell around that, oftentimes most businesses, they do not have their own logistics fleet, they do not own the vehicles on their books, and they have to influence, they have to exercise the influence. So I would say they have to figure out how they can exercise that influence, how they can have that realization of what is the potential through which they can, because EVs or electrification is one of the low hanging fruits. It is one of the first things that a business can actually make happen because the technology already exists, it's mature, it's commercialized, it's being sold, it's being scaled also. Some vehicle segments it's already scaled up. Some vehicle segments it is still scaling up, like trucks and buses. The numbers are still are not being churned out, but it will catch up, because the vehicle manufacturers, they will make and sell what the market demands. They will figure out a way to do that. So that's not a bottleneck as such, but where I think we get into a vicious circle is, are people taking it, right? And if people are not taking it, do I invest crores and crores of rupees into putting up manufacturing and supply chains to make that product? And till you see a lot of things on the road, you do not get confidence to buy. So I think that's where the corporates have a role to play, because eventually it will become a mandate, like Kapil also said. And you don't want to be leaving too much to do in the last part of the voluntary period. You would want to be almost there, if not already there, by the time the mandates come in. Yeah.
I mean, when it comes to green hydrogen, right, Professor Weber, let's say the corporates where hydrogen ship needs to happen, it's still from a business case perspective, it is fairly challenging for them in most of the sectors. In some of the sectors, as I said, low hanging fruit, it makes sense, they are moving ahead. But then in most of the sectors, they are basically they basically have to pay some premium, right? And nobody is willing to take that premium, neither themselves nor they're able to pass down. There are some subsidies which are in place, but still overall, I mean, they are net cash negative, right? I mean, in terms of, there isn't, the business case is not that straightforward. So that is something, so they are aware of it. I mean, many of them are aware of it, but because the business case does not make sense, they're not putting a lot of effort, right? I mean, because, unless and until there's a carrot and a stick, right? What exactly carbon markets kind of force you to do. I mean, for example, in certain sectors, let's say your equivalent carbon price, right? I mean, if it is 10, 20, 5, 10, $20 per ton, then it's a different story. But then in a lot of hydrogen equivalent scenario, that equivalent carbon price is upwards of 200, 250, $300 per ton. And none of the carbon markets allow for that pricing, right? So eventually you're priced out from multiple angles. I mean, from a conventional business case, from a carbon credit business case. So that is the actual sense of reality right now. And that's why people are not willing to sign long-term offtake agreements, etc. But the problem here is ultimately chicken and egg, right? I mean, unless and until you build those initial projects, somebody is willing to take that risk. The technology, the infrastructure, maturity will never come up. Banks will not ready to finance such projects. So it will be kind of stuck somewhere, right? And that's why government has a role to play, and that's why they are pushing it a lot with some of these early projects. But still, honestly, a lot needs to happen. And at a fundamental level, I think, I mean, the corporates and the businesses needs to get serious about decarbonization for the sake of decarbonization, not only for the sake of, let's say, some compliance markets or for making the business case better. So that kind of a thought process needs to come in, which honestly lacks significantly, or in fact, the capitalistic kind of structures don't allow for such a thinking. Otherwise, you are priced out. So that is where the reality is with respect to hydrogen.
Okay. Yeah. Yeah. So before Kapil, you come in, I think so. Can we make it a little quick, because let's take up some Q&A after that. Sorry, Kapil.
I'm half a minute. Business leaders are very serious. Example is steel sector. CBAM has commenced on 1st January in Europe. GSW and Tata Steel have made their choices. They are reducing carbon in their emissions, in their production. People who are not serious should become serious, because our finance minister announced 20,000 crore of investment for the next 5 years in CCUS technologies in this budget, which speaks volumes of the way things are going forward.
Wow, great. In fact, we already have a green steel manufacturer in Uttarakhand. The first green steel manufacturer in Uttarakhand has already commenced production, sort of in 2025. So, so I totally, and this is in the MSME sector. So, it's not really, sort of a large person bringing in huge investments and stuff. But, sort of, and they are probably riding the wave and they want to get their company listed on the stock exchanges. So, sort of people are using it for very, very strategic and interesting purposes. But great, let's move over to question Q&A, and maybe you can volunteer to take the questions live. And I would want, sort of, if the users can, sort of post questions that they have. Yeah. And in the meanwhile, there is this poll for the attendees. You can please attend to the poll. Yeah. So maybe, sort of, if you want to take the question live, you can just take the question live instead of typing now. Yeah. Yeah, Vikrant, would you want to go live with that question?
Sure. There is, I think, one question. Can the people be made aware of what they are paying more for? Absolutely, absolutely. And in fact, paying more for upfront, right? At least as far as EV and to a large extent, even hydrogen vehicles are concerned, or hydrogen as an energy source is concerned. It is upfront that you pay more, but you are saving. I mean, all other things apart, you are going to save a lot on your OPEX, and you are going to recover based on how your utilization and how highly you make your asset work. You are going to recover that well within the lifetime of the asset that you have paid so much for, right? So that part is where the confidence building is required, that it works. Lot of calculations are there on paper. Some of the pilots are running, which those success stories need to be put out, because you and I cannot go and convince a buyer. The buyer will look for his or her peers for confirmation and confidence building. Yeah, so that's what we need to do.
Yeah. So there's a question in the chat from Eugene, and he says that he's a founder of CEO of D-Grid Energy, manufacturer of cold chain solutions like solar-powered cold storage in Africa, India, Caribbean, and South America. We are interested in carbon credit offsets for reducing methane by preventing post-harvest losses via our renewable energy and cold chain solutions. Do you have experience in this sector? So any inputs on that?
So, Eugene, there are different sectors which are governed by carbon crediting mechanism. In India, only the industry sector is covered, while on the other extreme, in New Zealand, for example, 80% of the economy, which includes agriculture sector, is covered by carbon credits. So, in the compliance market, I'm sure that you will not be able to tap into India, but maybe look at other countries which have. The challenge is, in these sectors, it's quite difficult to create a baseline as well as understand and prove additionality. So that is an issue, and only those countries which have advanced mechanisms for doing this will be able you will be able to utilize those markets. However, some places voluntary carbon credits from these refrigeration schemes are allowed, and you need to tap onto Vera standard and other standards to see and third party mechanisms who can issue carbon credits on these depending on case to case basis.
Okay, excellent. And I think so. Anantan Radhakrishnan had posted a question: if electricity is produced using coal, can this be considered a hard to abate sector? Yeah.
So direct
Yeah, no,
electrification, it is not hard to abate, right? It is the easiest to decarbonize using, replacement of thermal power plant using solar and let's say renewable energy sources. But then there are nuances to that, and then the nuances has to do around, let's say, base load power, deep decarbonization of the electricity grid, and that is where things actually start to get hard to abate, right? I mean, and it is not hard to abate in a conventional sense of how do you call a steel industry or a cement industry. But then if you are looking at a market, I mean at a future electricity scenario where you need to have 60, 70, 80% run on variable renewable energy, then unless and until you have storage technologies which are not short duration, we're not talking about batteries which work for 4 hours, 6 hours, even 8 hours. But then you need to have storage technologies which run for much longer duration, right? I mean, let's say for weeks, even months together, seasons together, right? I mean, let's say so winter in north of India, hardly any sun out there. I mean, you're not going to, install batteries which would you store for months, right? So that's where chemical forms of energy storage comes into play, and that becomes slightly, not slightly, they are actually hard to abate. So deep decarbonization of grid to a certain extent is hard to abate, but conventionally, but then we are still far away from that. At least if you're looking at India, we are nowhere close to that 60, 70, 80%. I mean, first we need to get that. Parallelly, we need to also, there's a lot of focus on battery energy storage. Most of the new SECI tenders include a storage component to it, but those are all short duration storage, right? I mean, you're looking at 2 hours or 4 hours of storage. So I mean, with time, I think the next few years, some of these advanced technologies will also play a role.
Yeah, hi. I fell off for a little while. There's a very interesting question in chat from Shrikant. Sort of he's saying that with the rise of e-commerce platforms like Zomato, Swiggy, and etc., which is leading to an unprecedented increase in investment for data centers plus rise of number of two-wheelers on the road. Can we discuss any decarbonization roadmap for this sector from a policy and compliance point in view of the Indian context?
Let's take the data center part. Maybe Vikrant, you can talk about the two-wheelers.
Two-wheelers.
Uh,
Yeah, sure.
so about 3 days ago, the report said that at the moment, the installed capacity of global data center is about 100 gigawatts. And that is phenomenal because what it has done is because of the use of energy in AI, it has actually led to restarting of gas-fired power plants and installation of peaking power plants in the US. So on one hand, India and China reduced their energy or coal consumption for producing electricity. On the other hand, emissions from electricity generation using gas increased in the US because of incorporation of data centers, and we see this data centers coming up in Hyderabad, Andhra Pradesh, and several. I think tax holiday was also announced in the budget for data centers, so that will lead to several proliferation of these, and it's a very high energy consuming. So AI has dual challenges. One is definitely the energy challenge. And very interestingly, the data center capacity is not measured by terabytes or anything, but it is measured in energy consumption. So that should give you a sense of why energy is so important for this. Vikrant, I'll leave you for answering the next part.
Sure,
Maybe,
sure.
Vikram,
Yeah,
maybe
good.
before you get to the two-wheeler, right? I mean, let me, elaborate a bit on data centers. From a decarbonization standpoint, it actually ties up very well with the previous discussion we were having, right? I mean, the thing with, and the reason what Dr. Kapil rightly said, right? I mean, if you want to buy a gas turbine today, if you place an order, you are not going to get before 2029 or 2030. I mean, all the Gs and the Siemens are completely, booked for manufacturing capacity for the next 2 to 3 years. And the reason for that, and this is despite the fact that solar energy and wind energy is much more cheaper than gas-based power plants. And the reason for that is your base load power, right? I mean, a data center needs 24 by 7 continuous power, whereas a renewable energy source it does not give you that, right? It's intermittent in nature. So you need to have a battery energy storage. And even with that, you are able to get, let's say, 50, 60, 70% utilization. I mean, but if you need 100% utilization, in fact, 110% utilization, right? Because you need to have that backup and those kind of things, then it becomes a challenge. And there, from a decarbonization point, there are two, three kind of routes what is being looked at. Globally, in fact, in your US, there's a lot of money being pumped into small and medium nuclear reactors. And in fact, India also has waived off, as part of this budget, a lot of, let's say, import duties on nuclear components, and private sector has also been opened up towards that. So SMR, and there's a BSMR scheme as well, Bharat Small Medium Reactor. So that is being seen as as an upcoming of, let's say, area, right? I mean, which could be looked at from a decarbonization for a data center standpoint. Number one. Number two is definitely your longer duration storage technologies, which could be in the form of pumped hydro, advanced electrochemistry, batteries, sodium ion, hydrogen for fuel cells and gas turbines, right? A storage of excess of renewable energy in the form of that. So those are the kind of solutions which are coming into place for the decarbonization of data centers. And the challenge is that, the demand for data centers is much more faster, and it takes more time, much more longer to build out some of these nuclear reactors or hydrogen-based storage technologies or sodium ion-based long-duration energy storage at a competitive rate faster. That's why these gas plants are coming up. So very interesting times of people who are in the sector. Vikrant, sir, over to you for.
Sure. Yeah, two-wheeler. So, coincidentally, we worked with one of the e-commerce giant, also having hyperlocal presence. Hyperlocal is your instant delivery, Blinkit, and those kind of things. So those they had. I mean, we identified that as the biggest challenge. How do we, that last mile delivery, two-wheelers? How do we electrify, and how do we exercise that influence? So yes, there is awareness, there is work being done. There are ways in which people sign up. So there are two types, right? One is a captive fleet like Domino's and Pizza Hut have. They have their own vehicles on their books or on the books of the franchises, and they enlist the delivery people. Whereas others like the Swiggy, the Zomatos, the Blinkits, they have people sign up to do the delivery along with their own vehicles. They do not have their captive fleets, and then some e-commerce are in between. They have both some captive fleet, and most of it is where people bring in their own personal vehicles. And that's where I think the exercising of influence, coming up with innovative ideas, these people sign up on apps to do the delivery job. So they are having preferential selection for people having electric vehicles, providing charging when they are going to collect their delivery load to the hub. They can top up or they can charge for free, because these people are typically coming from that strata where even a few 10-20 rupees of charging provided free makes a difference to them, right? They earn like 5 to 10 rupees per package, literally. So those kind of things need to be done, at least to get this rolling. Once it gathers momentum, people realize that it is cheaper for me. I save more money, or I earn more money using a electric vehicle as compared to a petrol or a fossil fuel vehicle. They will move, but it's the first first push that is required, that I think the corporates are figuring out. Yeah.
Okay, so probably the last question of the day, Ekta has asked that in place of carbon, will we be increasing some other gas in case when we will be switching sides to hydrogen or other options?
Yeah,
Yeah.
hydrogen. So I did answer it, but I'll elaborate a little bit more. Hydrogen, if you even burn it, you get water vapor. That's the primary output. Just like if you burn a hydrocarbon, the carbon produces CO2, hydrogen part produces water. In case of hydrogen, you are only producing water by and large. Of course, there is a possibility of NOx, because hydrogen also has very high calorific value. So the heat release will be high. And if not managed, you can have the nitrogen in the air also burning and forming NOx, which is also a greenhouse gas. It causes acid rain and so on. So not want that to happen, but it is something which has been effectively controlled in IC engine vehicles as well, in fossil fuel vehicles. So those are the two. Yes, methane is low carbon, but it still has carbon, CH4. But methane released into the atmosphere is much more dangerous a greenhouse gas as compared to you burning it and releasing CO2. So I think that's where we are starting right now. But yeah, the question is valid. Yes, we are changing to different gases, but most of them not harmful, and some of them probably we are trading for the lesser of the evils at the moment.
May I also just very quickly add here, that is why, the focus needs to be on reducing energy consumption, focusing on energy efficiency to lower your energy end use. Because if you save 1 unit of energy at your end use side, you'll save about 3 units of energy at the production side. So that's the reason why you should take all decisions which emphasize on energy efficiency and energy conservation.
Right, guys, thanks a lot. And yes, so all the attendees, thanks for your valuable time. You have on your screen a QR code. I would strongly suggest that you please scan into it. I'm Kashipur and EV Acad. We have joined hands to bring this unique program to everybody. So, sort of believing that, sort of whatever we were discussing, different technologies, different, sort of stages of development, but one thing remains common across them is the need for technical, skilled, qualified, manpower and teams to run this through. And that is where, we have this executive certification program in net zero strategy and sustainability leadership. The first cohort is successfully underway currently, and we are looking for to, sort of have you with us in the second cohort. So if you thought that the discussions make sense today, please come and join us, because this program is spread over 11 months, different pace and very deep in rigor. And probably you're going to get into the details of these discussions and benefit much more from it. So please scan this. This will be on for some time. And thanks a lot to all the panelists, Dr. Kapil, Santosh, and Vikrant. Thanks so much for coming over and, enlightening us with your inputs. And from the attendees side, I hope you had a great time learning with us, and you will continue to be with us, and hope to see some of you in cohort 2. Thank you.